GTII fulfilling the downside as per expected. Let's go ahead and see what the potentials are for the following days. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a GTII technicals and raw price action thread of analysis on this Taco Tuesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, you guys, so I'm gonna try to get I want to do something a little different here. I'm going to try to get as creative as I can, right, for you guys. So I'm gonna show you another perspective here, right? So oftentimes when we're looking at price action in the shorter time frames, like not on the monthly, we're looking at them on like the 5-minute and 30-minute and hourly, maybe the 4-hour for some of you, right? But things change when you are looking at them in a broader perspective, right? And I'm talking about really the monthly time frame here. Okay, so in order to identify your zones of support, right, or previous supports, right, in this case, I would see already two connectors, right? So, for example, the wick low of this right here at around 70, let's see, what is it, 76 cents, right? This wick low here, which could be at which could be at about 74 cents, and this one right here, right? So that would be around 72 cents. Okay, so that would be kind of one of the areas that I would mark up, right? So something along the lines of this, right? So I'll just go ahead and take a little bit of a channel here, and since I want to make it a resistance range or a support range, sorry, I would very likely, let's see. I would actually take into consideration the bottom side of this body here from this candle. So right to that point there, where it could be 66.82, right? So this would be one of the zones for support, right? So this is kind of like marking down areas of relevant supply and demand. So this would be demand here. Okay, so now the other points would actually be, let's see, I could take into consideration this wick low here, right? So something like this here, because it has a lot to do with this wick here, right? From this massive candle, they play very well together. And then from there, I would just take it all the way to the to the most to the lowest point, which would be not necessarily this one here, but it would be this red candle, right? That has a lot to do with this one here. So that would be marked up as the second most potent area of demand, right? So this is kind of like how I trade, right? So I trade based on zones or ranges, right? So and to the upside, you have your very obvious targets, right? Like for example, this wick high here has a lot to do with this wick high, right? So in that case, you would take a range just like this right here, right? So we could take it to the body of this, which would be the opening of this candle here, right? So we would take it just like this, and this would be an area of supply, right? So now you can see the range that we're kind of trading in. Of course, there's ranges in between this, right? There's a couple ranges in between this, but I just want to kind of mark off the overall zone, right? So that you can see what these potentials really are, right? So now suggesting or seeing the candle, just take a look at this, okay? It's very, when you're looking at it on a monthly, you can clearly see that we're creating lower high structure, right? So we're literally making this downside continuation, right? So that can only tell us that we are potentially trying to find a new zone to kind of look for a pump to the upside, right? Since we're literally in the middle of all this price action here, there really isn't any true demand for a real upside, right? So if we give bulls a reason to enter, then that could be around these zones here. But of course, there are other zones to kind of look at, right? Of course, there's around 84 to about 92 cents, right? And even up to about $1 let's see, right at about $1.01 too, right? So we got very close to that even today, right? We got down to about 102. So that's all fine, right? I just want to show you that there are several ways of kind of looking at this, right? So now if we're looking at the structure of making higher lows, because we are sort of making that, right? Let's just take, for example, this, right? Let's take a trend line connected to this wick low here from where that was that 45-cent rejection that we got, right? And let's in a very discretionary manner, let's see where this connects, right? So if we go to the downside, please notice here that it comes down to 71.96 too. Right, so right within that 70-cent zone that we were already talking about, even making this type of trend line here, right? So that's just to kind of show you, right, that even that would suggest that too. So now in the monthly time frame, let's take into consideration our Gaussian channel, right? So this is a statistical indicator, right? So, and now please notice that the Gaussian channel mean band is located right at about 62 cents, which is right under that zone that we were talking about, right? So it's very close to that already. Now remember that this monthly candle has 21 days and 20 hours to close, so it's an eternity away. So we likely will have fluctuations within this mean band. It's going to be very slight, but I mean, you can see here that it's clearly running along that diagonal line that we had, right? So more confluence there to kind of look at, right? So let's go ahead and now block this out, and let's take into consideration geometrics now, okay? So since we have this recent closure of this monthly candle, right, we're presently on this one here. We have still those 21 days, 20 hours to complete. Let's take into consideration an inverse Fibonacci ratio, or a Fibonacci retracement, right? From this swing low to the overall swing high or the range high of this previous monthly iteration, right? So let's go ahead and take it just like this in an inverse manner and apply it right to the top side of that. And please notice here that your golden mean, the very important ratio that I always speak about, the 1.618 landing at 75.54. Look how perfect it is to my discretionary line at 75.21, right? So that's already signaling that there could be some type of touch there, right? So we were talking about also the space between 98 cents and 101, of which we reached 102 today. Please look at the 1.272 at 99 cents, right? So this area here usually serves as a pretty important zone before a bounce to the upside, right? So this is traditionally how traders trade, right? Based on ranges. So if you know where the range is, if you know where your areas of supply and demand are, then you have an edge over the trade, right? So this is just yet again like kind of another thing to suggest that we are in fact just in a natural ebb and flow. When you're looking at it on a monthly iteration, the drop to this zone here would mean nothing when you're actually looking at price action like this, right? So you're just looking at this target here, and wow, just look all the way to the left and see where that 1.618 lands at 75 cents, right? Also with this candle here, and let's take it all the way back here and take a look at that. Right, this candle top here, that was literally this huge run for a whole month, right? And we got that top side that just so happens to be located right where our 1.618 is. That just happens to be located where our diagonal line is as well, right? And just so happens to be very near our Gaussian channel mean band as well, right? So it's looking not bad, guys. This is really not a bad thing. Right. If anything, this gives an opportunity for the longs to really get to make a decision here before a huge upside catalyst or something that's going to come up out of GTII. Right. So, yeah, I kind of wanted to give you this type of outlook. Right. Because this, in fact, when you're looking at it as a formation, something along the lines of this here. Right. So, yeah, just like about this. You're looking at a potential ascending triangle. And ascending triangles, when you're fulfilling them on an uptrend, that usually is a bullish formation, right? And usually this triangle tends to break out sometimes out of the 50%. Yeah, we're right at 50% right now, but usually they tend to break out at about 65, right? So, and it would make sense if we did break out around this area here, which would be September, October-ish, right? It would make sense since we're actually creating this monthly candle coming back down here using as a huge support. And over the next 2 or 3 months, we could continue on to the upside, theoretically speaking, right? So, and then we could prepare for breakout after about 2 or 3 months. In that case, we would be at about that 65% to the apex of the triangle, right? And then this thing could encourage an upside continuation here, right, you guys? So, yeah, it's just I just wanted to give you a different perspective here for GTII, right? So now we can go back. We can go back now to our to our regular charts. And please take a look at this. This is the Gaussian channel in the buy daily, finding support right at that 104. Well, the Gaussian channel at 104, we reached 102, right? But we reached right at the bottom side of that Gaussian channel, right? So it has that support. But when you do have a continuation to the downside and pressure still towards the downside, in fact, you have increasing volume here for the bears, right? This right here. You can see it's ever so slightly increasing, right? So that can only tell us that there is a potential further downside to look into, of which can be looked at on the 3-day. And the 3-day time frame just so happens to have the bottom side of this Gaussian channel at about 81 cents, right? So 81 cents being very, very close to the targets that we were talking about in the monthly. But on the 3-day, taking into consideration an inverse fib, please notice right down here, 73 cents. Again, that 70-cent zone popping up at the 2.618. That is the golden mean. Okay, so yet again, we have that 70-cent zone marked or kind of showing us its ugly face, right? So it's just an even further validator, right? So, and now when we were looking at this chart yesterday, I think it was on the weekly time frame, or was it? Let me see. It could have been on a daily. Yeah, I mean, let me just put it up a little bit. We could probably use the buy daily. Yeah, we can use the buy daily. Okay, so yesterday, yesterday we were talking about the breakout period potentially being on this candle iteration. We just got the closure of this buy daily candle, right? So this is the next one now. We're about to start this one tomorrow. Okay, so this candle, if it does break to the downside, the first area to look at is the range between the triangle bottom to the hypotenuse up here. That's one of the ways to look at it as a trader, right? You can take that trend line and apply it to the downside here, and it just so happens to take you again to that 80-cent zone with a bottom side of about 71 cents. And go ahead and notice that the 3.618 on a 2-day now is showing at about 66 cents, right? So now 66 cents, that also sounds a little familiar too. Now, let me just see if I can actually show you a different perspective here within that first drawing that we were kind of looking at, right? So let's see. If we were to within these 21 days, if we were to fulfill the downside all the way to the downside with this monthly iteration, then the downside would actually lead to where? Take a look at the downside in comparison to this diagonal line. So it would take us to right at about 66 cents, right? Literally right here, right? Sorry, let me just go ahead and point at it. Yeah, so about 66.04, right? So this matches the what was it? The 3.618 on the 2-day, right? Right over here. Where was it? I'm sorry, guys. Oh, the 3.618. There you go. 66.48. There we go. Okay, so I'm just saying that it has a lot of confluence with the 70-cent zone. That's what I'm really trying to say. Right. So again, I'm not sure that we can reach all the way down there, although it would be pretty cool, right? Because then in that case we could really load the boat here, right? And then continue on that path to the upside. So let's go ahead and take a look at the RSI, and this will be the last part of the analysis, guys. So 30-minute immediate short-term time frame, a little bit of consolidation here. Take a look at your 4-hour with a little bit of consolidation as well. We have the 14-day simple moving average with a downside bias, which honestly could continue on to the downside, especially since we're looking at the 8-hour and daily within a very, first of all, this is in the bearish control zone here and also in the gravitational zone of the bear strength percentile. So this is very likely to continue to the downside, just like the way your 8-hour is kind of depicting as well. right? So now your 3-day time frame is also approaching the gravitational zone of the bear weakness percentile with the downside pivot on that 14, suggesting an even further downside as well, right? So, and now going up to the 5-day, you have the 5-day with a downside pivot, and the weekly has a downside pivot too. So this just goes to show that we have some validations to make, right? There's still some more to kind of look at for GTII, but it's gonna suck when we're trading within this range, you guys. Okay, but it's not gonna suck when you bounce from this and then just make a parabolic move to the upside here, right? So of which can take to really cool targets, right? So just in this case, please remember that the initial plan hasn't changed, right? It is still about fighting the naked shorts, right? We don't want to back down from that. Market equality, right? That whole deal is still present. All right, you guys, but I just want to show you a different perspective in the event to where you are curious as to why price action could lead to a downside like this, right? So this honestly could be one of those reasons. And to tell you the truth, I may be wrong with the bottom side of this here, right? Of the bottom side of the 66 to 74 or 75, whatever that was. And the reason why I say this is because you can connect the diagonal line in several ways. There are several different perspectives here. So if we use this trend line here and we connect it just like that, then that kind of brings into light a little bit of ease, since we are looking at this as a current support, which could honestly be another reason why we found support, right? But if we are to face the complete downside of that, that would kind of take us down to the area of about 95 cents, right? So that's also understandable, right? So just to kind of show you that there are several ways to look at a chart, right? And it's our job to kind of identify what the higher probability targets would be within the structure that you're looking at, right? Because plenty of people look at charts, plenty of people trade based on charts, and yeah. So and this is another thing, you guys. If you are watching all the way, then this is probably going to benefit you over everyone else, right? Because I didn't say it earlier, right? So penetrating the zone of 45 cents, and especially if we start closing beneath the area of about 45 cents, that would be an invalidation of this, right? So, and 45 cents, that's, I don't see us dropping that low, honestly. I mean, and to be very clear, people are waiting for sub $1 for a massive entry, right? So I'm sure that you have a lot of institutional buyers too, kind of waiting for that position there to really get long this thing and take it, right? So as you can see, that price action definitely has the thrust to be able to make a huge upside move, right? So yeah, all you have to do is really test those zones down here, and then this thing could actually take off, right? But please remember, first and foremost, that I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. Okay, you guys, I need you to do your own due diligence and everything will be cool. But with that said, I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.